Andrew, I want to start with you because I was reading your latest note, and you made a nice parallel between Chicago sports teams and the markets. As you note, this is clearly a year for the Chicago Bulls, not the Chicago Bears. But what does history suggest about next year? Will the markets reflect your basketball team, or will it be the football team?
Yeah, good morning, Leslie. Yeah, I think the point of this is that the second year coming out of a low recessionary bear market, which was this year, the market always does well. It always does well, and this year is just another repeat. So I think the people that were bearish were way too premature, and the Bulls were not optimistic enough, just like we weren't optimistic enough about the Chicago Bulls. But next year, if you consider the next year, it is yet another good year, but is much more tempered. And I think you're looking at, mid single digits to low teens year. And that's because the earnings story continues, but the Fed starts to throw some cold water onto it. You had Tommy Lee on the other day saying monetary tightening creates volatility. And I think that's what leads to lower, albeit positive returns for the market next year.
So, Cheryl, how do you think investors should be positioning their portfolios in the last few days of the year, both in terms of allocation as well as maybe sector selection?
Yeah, that's right. Good morning, Leslie. We're much more biased to value stocks here as we move into 2022, and I would agree with Andrew that I think we're sort of in the 10 to 15% type returns. So still very nice returns, but albeit lower than this year. I think you're starting to see that transition into sectors like financials, which are clear beneficiaries of a higher rate environment. And in fact, if you look at banks and diversified financials broadly, certainly the outperformers in a rising rate environment.
Andrew, you crushed it this year. Your numbers are pretty darn good. Their fund is up 34.5% year to date. It's obviously beating the S&P. You're ranked in the top 1% year to date. So given your prowess for picking stocks, apparently, which ones do I want to be in 2022, given your outlook?
Well, look, I mean, what's interesting, Scott, and thank you for that, is if you look at the markets rocked this month, but it's real estate, utilities, staples leading. I think the market is anticipating that there's going to be a quick pivot from tapering to Fed rate hikes. You wouldn't have those stocks leading if it weren't for that. So in my opinion, I agree with Cheryl. It is a smattering of different stocks, but I think largely financials and energy, which have been the big standouts this year, especially energy, which that's led to a big performance for us. It's very under-owned sector. I think those will continue to work next year, but I think you have to offset that with some of the more defensive stocks because it is a lower return environment, and simply in a lower return environment, you're going to have more volatility.